This is your daily market recap for Thursday, June 9th, 2022. Let's go.
Hey everyone, this is my channel to help investors and traders develop a probability-based mindset to succeed. Also try and keep friends informed of what's going on in the markets and the economy, and also a little real estate content as well.
This is Dan Max at EXPI Realty, aka the Trading Agent, and this is your daily market recap for Thursday, June 9th, 2022. Let's get into it. Again, if you're newer to the channel or newer to any of this content that we provide, please check out the Discord room. The link is in the description below. There's tons of educational side rooms, lots of chat rooms for specific information, recommended reading. Again, most traders don't realize is that the things that are keeping them from success and failure are usually just something simple as risk management or some sort of tweak to their systems, because most traders are all or nothing trader where they, literally go all or nothing all the time. And again, getting into the psychology of all this and how to manage it and how to deal with losers, how to deal with winners, the things that you need to pay attention to in the market, because a lot of people are, bullish, which is rather interesting because the market has held up. But I've told people, look at some of the action in these names. I mean, they were oversold, they're due to bounce, but then also pay attention to ultimately, it's the summer. There's kind of a void between now and the FOMC, and that void probably was a reason to mark up the market to make sure that these guys do A, B, C, whatever. Ultimately, it doesn't really matter, because if the market is in a bear market, keep in mind, bear markets last years, sometimes 18 months. So if you think a bear market consists of straight everyday down, then it's no different than a bull market where you have these lulls and you pullbacks and you buy the dips. Again, we'll talk about why we think this is a bear market. But again, if you're new to the channel, welcome. Please check out the side rooms. I appreciate everybody. Let's get into it. We always start with Bitcoin. Sideways, head and shoulders. Now, again, folks we've talked to have say the same thing. You're kind of in this stuck land. And if you don't hold 30,000, you're going lower. It's really that simple. I mean, sometimes simple is good, right? That's always appreciated. I think that's something that you should always love to see, is like simplicity in trading. US oil. Talked about the 125 range. Everybody and their mom thinks oil's going higher. This is a major red flag, folks. And if you've been trading for any period of time, and maybe you were lulled into a stock that you bought that, you think is going higher, even as relative as recently as, say, Tesla, where everyone who thought the prices were going to 5,000 after it already made a monster run believed it only would go higher. The market was literally gonzo, going nuts for Tesla. But people don't realize, the market makers take the bets. They mark up the price action to get people to chase. Sometimes there's not logic. So if you think about where oils come from, literally negative, whatever, you don't even need to go that far back. Here was the liquidity event. Again, I apologize, the volume's not on this chart due to Ukraine. Now we're having maybe a lower high. Problem is, with all this bullishness and you're not making new highs, something is fishy. Something is very fishy. And it's not really obviously that big a deal. It's literally that we're in a bear market. And if you study the past, and we'll get into this more in the oil when we do go over some of the oil's individual names, oil peaks, natural gas peaks last in a bull market, because usually inflation is the key to the destruction of a bull market. The bull markets hate that stuff. They love deflation. They love the tech deflationary ability of the consumer to continue to buy more, and then the wealth effect from the stock market going higher, and then more deflationary cost basis for certain things. Now, again, people argue, well, we haven't had deflation in years, which no one would argue against that, honestly, if they're a rational person. You start to see, though, the tech market has peaked, and that was the leader. So you have to assume when leadership stops leading, the market is going to change. And when that change happens, it's usually violent, and it's usually money moving everywhere, or moving out of things, and nothing's safe. As I always tell people, they throw the baby out with the bathwater. They always do. That's never been that's not a new thing. Anyway, TLT, I've said this about a billion times, that V bottoms are usually very unlikely. And this is and here's an example of something that's been just waiting till the Feds to speak. We talked about the bottoming here in the TLT. Said this action was very explosive, peak bottom action, the velocity down, breaking out of the channel, then going lower. Well, what happened? We popped up. We talked about this probably failing. We said channel high, 20-day, it's funny, went a little higher. Either way, I mean, you didn't really miss much. And what do we say? Like, you can't chase the bond market. Let it come back. Well, here you are. You're coming back. Well, what was it really waiting for? It was waiting for the feds to speak. So we're right back at the lows. Okay, now you can start reloading, or if you want, you can just wait and see what happens, because there might be a situation where you do get a bear trap where, you know, it goes a little lower, then goes higher. Again, if you started building a position down here, I don't think you're going to go wrong. It's the people who aggressively chased up here, or if we got, you know, again, because we thought this level, you can see on the monthly why we thought 130s. We thought the 100-month would hold in this area, like right around here. You can see all the, again, I don't have it drawn specifically, but now you see why we held like the 2018 lows and how you can like kind of gauge where you think the market can go. Pop up to 123, maybe 131. Keep in mind, like the bear market's typically interesting. Like look at the bond market; it got bought. You know, 2000. It literally started in it didn't really get going until October. But think about what the bond TLT went from 90 to 123. Not a bad move considering the market was down ginormously and this thing was up 30%. Could this have another 30% up move? You do the math on that. What is that? 14 times 3, 145. I guess it takes you, how convenient, back to these levels. Okay. I mean, that's the TLT for you. I mean, there's upside if inflation's peaking, because the market will, people don't understand demand destruction. Like the economy, it doesn't matter if there is inflation now. It's going to price in the future where the consumer can't afford to buy anything, and the consumer goes literally puts their wallet in their pocket and doesn't take it out. Like then demand destruction, and that is deflationary, and that's again always what the Fed is super worried about. Which 2% inflation forever is bullshit. But anyway, I digress. The dollar. Congratulations, people. We were talking about this in the chat room. We said, hey, I honestly think this is a bigger up move coming. We said it on the monthly. Channel low, you had to channel highs. Well, sometimes you get to channel highs and you back off. But notice the thing that we talked about, 2720s. Like we said, this like low 27 had a hold. It did. And then ended up being the backside of the trend line, close enough to the 50-day for government work. And look what's happening. Now we're breaking back over the 20-day. If you were long the dollar, you let it go. At this point, I don't think there's really much to do. The VIX. Here we go again. Why? We expected market weakness, yet all these day traders and people who have to overtrade are just, they don't see the bigger picture. And we talked about it. If this is a bear market, you're seeing higher lows in the TLT. We said watch the mid-20s. Well, here you go. Here's the support resistance zone. I mean, do you want to, I mean, you can, here it is. Again, now what exact price? Now, because people will be like, oh, well, you thought the bottom in the VIX was at 24 or 25. I don't know. Please stop. I mean, people have like this infatuation with perfection, and that's where they mess up in trading, because trading just isn't perfect. It's not like an exact science. Like if, here you go, you say, oh, the trend line here, and it retests, and it was breaking out, and you go, oh, it's going higher. Well, then it came back. No. I mean, again, the levels matter. The action matters. Sometimes you go a little lower. I mean, you get the W patterns. You get like these head and shoulders patterns. You get all these different patterns if you study the past. The SPY. All right, we're going into what? What are we going into? Oh, CPI numbers. Whatever. Talked about this. This period of exhaustion, basing. Now you made these higher. You popped off the lows, because again, in a bear market, I've said this in every single video. You pop, you chop, you pop, you chop, you pop. Ooh, bear market rally. Chop, pop, chop. Every green candle, it's amazing, because I think most retail traders can only be bullish in a bull market. Like, they don't know how to short a bear market. Like, it's just, they get wiped out, more than likely. They can't, flip this over and pretend this is like an uptrend. Because what happens in an uptrend? You get nice, smooth up days, and then the pullbacks are usually quick and violent. And then what? They lead to higher highs. Like, that's a bull market, like in a nutshell. Well, now you flip it over. In a bear market, it's slow and steady down, and you get these bear market rallies that go straight up, or they're violent, and then you just continue lower. Now, are we due for more up? I mean, I think you have to use that 20-day in red here just to really verify it. Now, I know today's action is down, but look at the volume. You still have the FOMC next week. You got a ton of things that are going on that, again, if you were bearish and you shorted the highs, this is why we always talk about trying to nail highs and trade extremes. You can wait through this and shorten and watch what happens. But if you're shorting down here, you're caught between a rock and a hard place. So at this point, news tomorrow, we'll see what happens. QQQ, I mean, same exact story. This thing is, the Qs are done. I mean, I've told this people a billion times, and I'll say it in every single video until we're at the bottom. We have not gotten below the 20-month and sustained for the whole bull market. Well, again, a bull market is a nice smooth uptrend. Gets a little steeper. The vertical last move is the bottom, is the top. Just like in a bear market, the vertical down move is the end of the bear market. Well, here was your end, folks. Diamond Hands, Dave Portnoy, and all the retail traders who got rich. I mean, TikTok videos of people who literally know nothing about the market getting rich. Well, that's over. That's over. I'm sorry. The easy money is not bullish anymore. And I say this in every video, but if the market isn't down every day, I'm wrong. That's fine. Go look at the names. We'll walk through them and we'll talk about why I'm like, just don't ever touch gold. Don't touch these things. Just wait. IWM, we talked about like the 50-day, this 188 area. Oh, but Dan, it went to 190.60. You're wrong. Again, watch the areas. Now what? Now you're back below the 8 and 10-day. IWM popped, flopped. Gold, here we go. Let's get into this. Because again, I mean, there's a lot of really nice guys that trade gold and silver, and they post stuff on Twitter, and they really mean well, but they are the Pied Piper for retail slaughter. Because again, I don't want to see my gold and silver friends. Like, these are people who are smart enough to realize it's kind of like the real Wall Street bets of like, screw them. Like, everyone knows they screw over silver and gold and, you know, the futures markets. I want these things to win, but I don't want all my friends to get blown out before the big money comes. You know, think of this as like a pig on the rotisserie, and you guys are jumping into the fire trying to get a bite when it's not ready. We've talked about gold and silver, even the miners, and because we're going to go through them quick. Wait for the market to flush. Throw the baby out with the bathwater. Wipe all this stuff out. Check out the monthly, because again, no one's going to argue that long-term this is a bear market. People are saying, oh, it's a double top. Whatever, dude. No, it's a big cup and handle, and the handle can take months. It's a freaking monthly chart. Months. What's the best place to area to buy? I keep saying in my mind, I think the 160 level, maybe even the 50 month if you somehow got down there, but I would start loading anything under 160. I think you can go with it aggressively with stop. Silver, same action. You know, these people who constantly pump silver drive me crazy because I'm like, silver's never been friendly. Silver is not your friend. Silver is the widowmaker. Literally. It just beats the shit out of people constantly. And one of the things that you notice about bottoms, sorry, it's probably easier to see on the monthly, is that you get like just choppy action. You get a wipe down low to go higher. You get this pop up in 2008, wham, then that's the real up. Well, here you go, a pop and chop. Let's think about this. Like, what is the best move actually for silver if you were a bull long term? You need to shake out the weak hands. And the weak hands are the same people who are leveraging 20 to 1, 10 to 1, whatever, 3 to 1 with options going, you got to buy silver now. You got to buy. Today's the day to buy silver. And it's like the action says you are absolutely wrong, but you're going to continue to say you have to be right. Because I get that. It's like the mind. That's what the mind wants. Silver's not going anywhere. And if it does go up, guess what? You want to be a little late? I get that. But silver's not one of those things that's your friend. It usually retests and chops. So look at the action. You know, we talked about the no-brainer buy zone in December. Nice little rally. Now what? Do you think this is... I mean, it could be literally just this. You know, we talk about these pops down. Well, you drop oversold, pops. I think it's going lower. And the only reason I think it's going lower, because people argue, oh, inflation, yada, yada. Doesn't matter, folks. Look where we're at. If it was actually leading like some of the oil names as the inflation hedge, this would be up. It's not. It's not. So again, whether the market's correct or rational, you need to stop thinking the market's rational. Like, again, if the market was rational, then things would be priced at the correct price all the time and the market would be easy. No, you're dealing with irrational people trading in an irrational market. At some point, silver will drop to a price, and you should be there with your hands wide open when everybody's fearful, not when people are singing Kumbaya, drinking lattes, and dreaming about unicorns. Because that's how silver bottoms. Silver bottoms in a freaking blaze of glory. Like, people getting blown out. Like, woohoo, I'm losing all my money. This is awesome. And then, boom, it'll turn around and it'll be, well, if I would have done this and would have done that. No. GDX, same thing. Popped at our support zone. Look, hits the 200-day, backing off. It's ugly. GDXJ, same. People have been for weeks trying to troll and say, oh, you're wrong. And I'm like, You don't know the past because you don't know how GDX, you don't know how do these miners bottom. You just don't. Action is ugly. We're breaking the 20-day. Now, again, someone goes, oh, you go from 51 down to 35 and you pop 7 points. Oh, you missed the bottom. Folks, there are plenty of retests in these things. And again, you don't need all these retests if you blow out the price. And if you blow out the price, let's think about what that would mean with GDXJ. You break the bottom of the channel. Break the bottom of the channel. So where is that maybe? 20? 5? 20? I don't know. But then I can start buying down there because there's going to be ultimate panic. Ultimate panic is the time to buy, folks. I mean, think about Buffett. Blood in the streets, he buys. Celebrations and crowds, he's gone. He's out. AG, same thing. We talked about, you get up here, this range. We talked about very nicely. Please take your profits. Now it dropped and cut in half. Now what? It's really obvious. Wait. Just wait. Just absolutely wait. Love the stock long term. Well, again, love all these names. I'm not going to put them up here because I think they're crap. AEM. Love this stuff. I'm getting smushed. NFGC. I think this is a good buy long term at some point. Let it come down to the $3 range. Buy it then. I mean, this stuff isn't rocket science, folks. But you make it hard. Oh, I got to buy PAAS now. No. Again, if you think FOMO is a legitimate trading strategy, just be aware the market does not move in your favor every day of every week or every month. Look at this crap. Do you want to trade this or short stuff or be involved in other trades? Look at this action. It went from 26 down to $10. This stuff can correct 40-50% really quickly. So if you do 50% from 30, it takes you down into the 15 range. And you're buying up here in the 21, 22. Now maybe long term you're right, but can you leverage it and hold that? I wouldn't. I'd rather just sell out and come back to something else. Same rant every day, but people need to hear it. I know. Trust me, I need to hear it myself because I get very tempted to go, oh, gold's down a ton. I should buy it. Wrong. Letter X. We told you to sell. This is the 200 month. We also told you to buy at the 20 month area, around 19, 18, 20, whatever. We're all buying down here. Nice double. And now what? Well, you letter X this, letter. No. Stay the hell away. Throw the baby out with the bathwater. How low can this go? In a bear market, back down to single digits. It gets down there and you grab some and you grab it hard. You just grab it and you don't even think twice about it. I'm just warning y'all. VALE, same thing. Again, people are like, oh, you missed the bottom at rally 20%. I don't care because I don't think there's upside. It's not going to make new higher highs. It's just a bear market or a bear chart, a bear rally in a downtrend. Bull rally in a downtrend. Just wait. Wait. CCJ. Man, I hate that I feel like I have to troll these But what did we say yesterday? 3-day rule. Great news on the FDA or on the government purchase of $4.5 billion of uranium. Getting away from Russia. Yesterday, you had stopping power. Now, look, you're giving it back. Now, again, people were like, oh, but you missed out on this move. And I was like, no, I literally saw this. I just passed on it. Well, you passed on a 20% move, 30%. You're right. And I will pass on probably multiple ones, and like in the miners. And guess what? When they come back down, I'll be there. Because now you can make a... Here's is where it gets a little dangerous. What if this is the left shoulder, this is the head, and this is the right shoulder? You folks who are super bullish, and again, I don't even want this because I want it to base out, but it could be a monster head and shoulders pattern because, again, if everything gets flattened out and smushed and road graded, flat, beat the shit because of a bear market, which always does, what do you think? Because, again, I mean, let's zoom out to the time machine and just remember when CCJ was doing so awesome and then 2007 and 8 happened? Oh, and then the bear market. Oh, look at that. Here's the right shoulder. Bam. Bam. Bam, 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 bam. Nothing's immune. 2011. Bam. You guys and gals, I'm just telling you, don't put yourself in a position to get wiped out. That's all. Arrow. Love this stock. And people get, I had someone who's like, hey, you know, it's popping. It's over the 20-day. Do you think this is the bottom? I'm like, no. Has the market bottomed? No. So the answer will always be the same. Mosaic and CF. Man, people, again, I don't think people realize like how it's just a constant, never-ending. You get these devil's advocate. You don't know what you're talking about. Maybe you could be wrong here. And I always will prep people. Yes, I will be wrong. 1 out of 10, 2 out of 10. It happens. But I know my past. I know the history. I've been caught in every trap in every game that you think that you will not get caught in. I've been caught in and documented and understood how to stay out of them. So one of them says, even the ag names. Oh man, food supplies, yada yada yada. This no, you gotta buy ag names. Dan, you gotta buy them. You gotta buy. No, I'm not. Dan, you gotta buy ag names. Look, post Ukraine. Okay, that's cool. They had nice runs, and people scalped it and played it. And I was like, yeah, I'm not buying this for the long run. You're right back to where you were in March. Now you're making lower lows and lower highs. Not bullish. Even though the fundamentals are extremely bullish. Same thing, head and shoulders top, CF. But again, people just, man, they literally can't take their foot out of their mouth and study the past. Like, they have to go, well, I read this in the paper, and the food shortage, and this is this, and this. Baby, win the bathwater. Think about it. Never forget that analogy. Think about it. Like, when the market is selling and liquidity is being pulled out of the system and people need to cash out, it's not like they can say, well, we're not going to sell gold, and we're not going to sell oil, we're not going to sell no, everything gets sold because redemptions, the market, like just margin calls, whatever, you have to sell. Not you hypothetically, but institutions. Nothing's safe. They put pressure on it, and then guess what? People front run it. Then the high frequency traders front run it. They push the action. The market maker then literally pulls his own bids. It gets his or her bids, and it gets mashed. AMD. Too funny. I mean, not funny, but it's just like, you don't know what you're talking about 90% of the time. Most people don't, unless you've been trading. If you've been trading 3 to 5 years, you've never seen a bear market. If you've not been trading 10 years, then you haven't seen multiple bear markets. And if you haven't been trading your whole life, then you haven't seen the cycles. But I've done all of them. And again, you're like, oh, are you a billionaire? No. Again, I make mistakes. I make mistakes, trust me. But one of the things I try to do is not make the obvious and easy mistakes. That's the big difference between you and following us versus the average person. They're going to make the same obvious mistakes. Hopefully we will sidestep them, and ultimately our chart of our account balance will be a bull trend always. Higher highs and higher lows. That's the goal, folks. It's not to always turn a $25,000 account into $1 billion. No, it's to sustain and earn higher earnings and pull money out of the market, because again, just because you make more money doesn't mean you need to leverage your trade, because that's just as stupid as playing blackjack, winning 3 hands in a row, $25, and you bet $75 and you lose that hand, and now you're right back where you started. That's not what we're trying to do here. AMD, we said head and shoulders top, this is a piece of crap. We said watch the 100-day, watch the 0.618, watch this old trend line. Went a little above it, fail. Awesome trade. I mean, again, we've pointed these out. Apple, we said you could short the shit out of this at 150. You're welcome. Oh, but Dan, it got up to 150, 130. My bad, I guess, question mark. It's a bear market. It's going to go lower, going lower. Fired up today because people are just, man, you're gone for a week and you read all the messages and you're just like, man, people are really good at defending when they're wrong. And again, I mean, I'm wrong on oil, but I'm not sitting here going, I'm right. I said, people, I'm wrong. And when this drops, I'm going to have to reposition and take my lumps and figure out my best strategy. But at this point, what I have to kind of stick to, because I don't think unwinding my shorts at this point makes sense, because we're at the top. I was out of town for 9 days. Market drifted against us. Again, oil became the safe place. Safe. Safe. Just kidding. Facebook, watch it. It's interesting. You pop up. People, this isn't a bull market action stock. Look at this. You have a high, fail, gap down, chop. Now people say, well, where do you short Facebook? And the answer is really simple. On extremes. Well, what's an extreme? Just a pop. Here's a pop. Here's a pop. Here's a pop. Here are some pops. There you go. Trade it. I mean, it's going lower. Now, again, if you want to short this for the long term, just know the reference is we are technically at the channel low and the 100-month. How much lower could it go? It's probably waiting for earnings. Let's just call it what it is. It's a piece of crap that needs, kind of like the market, it'll float sideways because it's been beat up, and it'll take time to kind of unwind the next move. Roblox, here you go, VPA, buy signal on earnings, pop, holding the 20-day. Now, again, if this was a bull market, oh my God, I would have calls, leaps, stock. I might only trade Roblox and let this ride, because that was some of the best trades we've had last year. You could buy this thing and went, bong. Here you go. You bought this thing, Bang, you had the VPA. You saw the volume price action. Look at that thing. Here was the bottom at 60. You could have bought it anywhere in this candle. Look at that. It's a big ass candle. And it doubled from the low. Approximately. Not really. I get, sorry, up 80%. You're such a, man, you're terrible. You are terrible. Oh man, I'm getting hazed on Twitter. This is hilarious. Anyway, keep in mind, just be aware that there's a lot of stuff going on. I think ultimately a lot of you need to like think about where the market is. And again, if the trend is down, trade the extremes. Think of this like a bull market. You know, when something rises a ton, you take some off, you buy the dip. No different now. Should be shorting pops. We talked about this blue zone in the 790s. Say even the 20-day. I mean, good enough for government work now. If you look back at it, looks like it's going lower. Oh no, let's go EXPI first. Let's keep the order. Here you go, 20-day. It's just got a hold here. Oh man, the stock again. We are mashing it out of the park, doing well, but fundamentals don't matter. Remember that fundamentals don't matter. Fundamentals don't matter. I'm saying it. Did I say fundamentals don't matter? I think I did. Okay. UTHR. Here you go. A VPA buy signal, double bottom, volume, chop, chop, boom. Now, okay, the straight line move. Now, again, think about this like concept. The straight line move. The more it's up, the less you own. Why? Because the pullback becomes more imminent. Now, does it mean it's going back to 156? I don't know. But if you bought this stock and you were 100% long this name at this point, you are begging to give back gains. That's just how it works. Remember, the market maker absorbs inventory to sell at a wholesale price to sell later at retail. Does he do it all at one price at one time? No. So we have to adapt our trading style to swing trade. The same thing. I'd say even day trade. Like pick your areas and layer into them correctly. Here we go. Now we're pulling back. I mean, you could even leave the trade, or you could somehow, if say you really wanted to hold on to it, take your stock off, roll into long-term calls, like fix your exposure, meaning that you could only say your calls are $6 a share. You could only lose $6 a share. That's all you'd be willing to give back. You don't own any stock and it goes lower, you're gone. That's the kind of stuff you might want to look into. Oh, good old oil. Everybody and their mom pounding on us going, oh, you're just wrong. And it's like, I'm telling you, I'm just early. You guys are going to be the ones who are the idiots who are buying this stuff thinking that it's safe. Again, safety. I love gold, love silver, you love uranium. I've now pointed out how many examples every day, constantly. Okay, oil went higher. What do? You stop out, but you don't give up on the trade. You don't start believing the dumb shit, bullshit answers out there that it is safe. No, there is no safe. If the economy is slowing, demand destruction, people aren't going to spend money on gasoline. Shipping, everything that is related to oil demand will literally drop and fade like everything else. There's nothing safe. That whole debate on safety is just, it's all relative. Because again, what do you think was considered safe in the tech.com era? All tech is safe. What was safe during the banking, housing, commodities bubble of 2000s? Oh, Wells Fargo is safe. Bank of America safe. Bear Stearns safe. Do you see their balance sheet? Goldman Sachs, they're safe. No. Don't be that silly folk. So now what with oil? If you look at the futures, we're making lower highs. We talked about this action. You see the red flags here. And again, they're not even that, like, the market maker just realizes, like, there's nothing that to sell against. And so what I think ultimately will happen is it's going to be a gap and go down. Meaning, like, the action just gets pulled so strongly up and there's no sellers. And when they're ready to go, there's going to be also, like, the infiltrated, it's such a terrible word to describe it. The all-in effect of all the buyers leaves a liquidity trap, meaning there's no one left to buy. They want the market price to go down. They just start unloading their prices. Because, again, if you think about the USO, let's think about where the market makers probably got the most entry. Oh, yeah, down in the teenage land. Up in the 90 area, they're probably like, I'll take a 400% gain. You're welcome, maybe? I don't know. We'll see what happens. I could be wrong. If it goes to 150 like everyone's predicting, I will be amazed because usually everyone's wrong. I don't know if you guys remember Tesla, when everyone said it's going to 5,000, then it proceeded to get smashed. 1,200 range, it's going 5,000. It's got to do another double. No, nope. Thank USO again. This action, and again, if we get into intraday action, it's not really the place to do it. We can do it on the Discord room, but this is like think of it as like your car is running out of gasoline, literally, and it's just putzing along, and it just happens to keep going because it has momentum. That's all this is. That's what I think this is. Because again, if you think natural gas peaked, oil's peaking as we speak, what do you think's coming? Slam. It's really that simple. Needed some coffee there. So keep an eye on this action. People are like, oh, can you pick tops and bottoms when the volatility is high? Which we have to say it's high. It's been it's a bear market. Volatility always sustain high, like high levels. You have to be very aware that there's a reason why. All right, let's go back in the time machine, because I think it's always worth why oil was the last thing to peak. I know everyone's like, oh, it's July, Dan, you gotta wait for July. And it's like, I don't necessarily know if I have to wait. But because again, the recession's already started. Keep in mind, the recession, think about the market. I think it peaked. I think the banks and housing peaked in 2007. Everything just kind of waved, and this is the last stuff, and again, will we all not agree? Stop the video, come tell me if I'm wrong, that the only thing left making higher highs is what? Oil, natural gas. We're at that same point. So whether it's July, June, May, I don't know. I'm just going with the probabilities of the repeating past tendency, which is that shit peaks, lasts, and goes. Because remember, bear markets are caused by inflation. The Feds have to raise rates, pull liquidity, yada, yada, yada. Look at this action today. I mean, you saw the port go out in, Texas or whatever, and then now European gas is up. And okay, all right, we'll see what happens here. I mean, again, I think natural gas has peaked. Let's just not get it twisted. Okay, here we go. XOP. This is such a crazy action of. It kind of it reminds me of the Tesla here. When I say Tesla, smooth trend upline, blowout, death. Nice big up consolidation. Then you had this nice channel. And boom! That's the death move. That's the end of the bull market. Here we are. Let's pull up XOP. Not only did this come from the depths of almost nothingness. Remember, it did a monster reverse split. What was it? Can I see it there? Whatever. Monster reverse split. Big up move. Called that bottom down here. Nice rise. Well, look what you've gotten. Now you've gotten this sweet, steady channel. You get the blowout of the next channel. Now we're at the parabolic blow off. We like shorting here, and again, I still think long term, meaning long term, next 3 to 6 months, we will be back below those areas significantly. I think again, you will see a double-digit integer price on the XOP at some point. I can literally guarantee that if this is a bear market, based on bear market. So what happened? Now you broke over the trend. Notice the red flags. Biggest candle days are selling yesterday's action when oil and natural gas probably should be going higher and higher. Now what do you have? The ExxonMobil special from CNBC. Oh my God, they're literally advertising sell. When they talk about ring bells at the top and bottom, that's what CNBC does. Crisis, whatever, when they go crisis time in the markets, bam, the market bottoms. When they go, oh my God, housing is going up forever, you got to buy a house. No. When oil... You see the pattern here, the market makers work. They work in cahoots to take, because again, this is a great question. People are like, how do you tell the difference between big money institutions and the market makers? Well, the institutions are just big players. They're big gamblers of the casino. The market maker is the casino. They take bets from small fries like you and I to all the guys betting millions and billions of dollars, whatever. That's what the market makers are. Well, here you go. Here is the blow off. Let's get into some names. ExxonMobil. Oh, you got to buy it because of the CNBC special. Look at this crap. You don't think people from the past who've been trading the stock look at this action and go, I don't remember the last time ExxonMobil acted like a tech stock. Do you not think they're looking at this area? Here, what was the old high? Yeah, 104s. You don't think they're going to sell up here because they've seen this action before. Think about in the bear market, 95 down to 40, 55. That was actually held up pretty well. 105 down to 20. Now, again, I'm not saying it's going there tomorrow. But if you start shorting up here in the upper 90s, low 100s, do you think you're not going to see the 70s at some point? If it's a bear market, again, preface that always, if it's a bear market, adios, amigos. XLE, we'll get into a few names. I like to do some of these bonus oil names if you watch this far, because I appreciate you guys. Same kind of action. Zoom out on the monthly. Oh my God. Is this a head and shoulders top? Because again, it's so funny, the narratives comparing now to 2 years ago where oil was done. There's no oil ever going to be needed again. I mean, we're all going to be electric economy. Oil is done. I mean, you literally were negative futures market. They're paying people to take it because there's no room and cushion. Look at this crap. Is this a head and shoulders top? I don't know. On the monthly. What are some other names? I mean, I know what they are. It's just they're all way down here. Valero. Hey, gas stations. They're literally trading at 30 times future earnings. Get the beep out of here. This is done. This has gone out and stock was at 31. You're at 140. And people are like, oh, the crack spread. This is it. Okay. If it's a bear market, gas stations are going to struggle. Chevron, they are a gas station as well. I mean, they're vertically integrated, as you know. What did we say the last couple days? Watch the action up here. You had this little red flag here. That was the first like legitimate selling. And you go, where's Chevron come from? Oh my God, 51 up to $1.75. Now everyone's gonna say, well, oil's up then from negative whatever the low ends up being. You want to price it at. I don't really want to use the futures, so let's use gasoline. Say gasoline bottom was $1.50 a barrel. Now you're up to $5. I mean, is that priced into the market? 300, you know, a double, or I mean, sorry, a triple. If that's tripled, what is this off the bottom? $1.50 to $5 gasoline. Is that priced in? $53 to $1.78. I don't think you need to be a math genius. I think you can see that's pretty likely priced in. Now again, could it go higher? Let's preface this again. It's bear market. No, not happening. So just keep that in mind. Look at the close here. And just while we're here, what time is it? You know, last minute. Everybody was bullish, and it's like, hey man, I get it, but this is a bear market. Zoom out. I hope this kind of stuff helps. Now again, because it helps me. People are like, why do you like to do these videos? Because not only am I talking to you, I am reaffirming my subconscious exactly what I need to see. Because again, I'm not. Remember how everything I'm showing you guys is based on history, the past, some sort of reoccurring theme that the market does. It's not like I'm sitting here going, zoomed in on the 10-minute going, well, this is what's going to happen in the next 10 minutes. And this is what's happening. No, we're trying to be probability-based traders, meaning we're using probabilities to garner and venture into what we think is going to happen next. And again, in a bear market, nothing's safe. Nothing. So if you know that for a fact, what do? You short things. And now again, you don't always stay short, just like in a bull market. The more you're up, the less you own. You buy dips. Opposite in a bear market. I hope this stuff helps, and it's kind of getting your mind, because a lot of people are like, I'm excited to learn this and actually in the future take this knowledge and blast it into the next bull market or make a ton of money shorting the market. And it's like, I hope to be the best captain I can. And again, there will be times. Now again, if you knew what we did the last quarter, we literally nailed everything perfectly. And it's like, oh, now you're early on oil. You have no credibility. All right, I get it. You're only as good as your last trade. But just remember, you are a trader as well. Are you going to hit 100% all the time? So your probability mindset has to realize, like, if you follow people who know well, do you think they're always going to be right? And if they promise you they're always right, is that real? No. Love you guys. I really appreciate everyone's support. Thank you again for all the love and the time that you take to listen to this and promote, and not even promote it, but just share it with others. Because I think people who are willing to listen are the ones who learn. Like, we were having this joke about, my buddy's daughter learning to drive. And it's like, do you think, what is the difference between driving and learning how to trade? Well, at least in driving, you have to go to school and learn what you're doing. You have to, to get a license. You have to do it. In trading, they just say, go right ahead, get out there and do it. And look what happens. Everyone crashes and wrecks. I don't know. It was a good time talking. Anyway, have a great day. Talk to you.
Hey, thanks for watching. If you have any questions, stop by the Discord room. A link is in the description below. Also, if you'd like to help support more free content, the PayPal link is in the description as well. I appreciate your continued support of the channel.